There is one secret weapon to becoming the best trader in 2025, and that is divergence in the market. If you look at this line chart, you can see price swept liquidity, price broke structure. We would wait for a fair value gap to enter within. But now we want to take two particular pairs which should correlate with each other. Because if you have a low on the NASDAQ which swept liquidity, theoretically speaking, you should have the same low on the S&P, sweeping liquidity. That is where both pairs are correlated with each other. However, if one pair sweeps liquidity and the same low which should be swept on S&P has not been swept, that is divergence in the market, meaning there is a relative strength to the upside on S&P, and this is your biggest sign ever of a potential reversal in the market. So if you take a look at this particular low right here on the NASDAQ, you can see we never swept below it. That was the previous day low. Now, if you take a look at the exact same low on S&P, you can see we made a liquidity sweep, which is showing you a cracking correlation between the S&P and the NASDAQ, which explains this huge movement to the upside. And on a smaller time frame, during the peak of the New York session, you can see this fair value gap right here, this inverse fair value gap, which is a balanced price range after this break of structure, which also swept all of this liquidity, giving you a really solid entry, all off the back of divergence in the market. So if you want to find the highest quality setups, look for divergence between certain highs and certain lows, because that is going to give you the biggest sign of a reversal in the market. But go and back test this and let me know how you get on in the comments.